Turned out to be a very, very strong afternoon of trade. We are in conversation with all the experts. Before we carry on with the fundamental conversation, some more trading ideas. Sandeep Wagle is with us. Sandeep, it's bulls charging all the way. What are your trades?
I would have a buy in a Page Industries, stop loss of 24,000, target of 25,200, and a buy in a Berger Paints, stop loss 318, target 333.
Okay, Sandeep, thanks a lot for those trading ideas. Let's move on, discuss some more names. The market's running away now. The Bank Nifty up about 450 points at this point in time. Federal Bank, just pull out that stock. That's the one. In fact, some of the smaller private banks now moving to the high point of the day. DCB Bank is the other one where you've seen that move. Apart from that, Grasim and a lot of stocks where there's quite a bit of gains happening right now. For Reliance Capital, it's been a big move on the stock, 9% higher on that. Repco Home Finance, that's looked up. Mr. Wilson, where do you stand, on a stock like, say, DLF? After that big rally, there's this QIP, of course. It recently had the move back about 200, then it slipped. Today it's up another 4%. What are your thoughts on the stock?
Shenus, the theme which is playing out in DLF is becoming debt-free on a standalone basis. On a consolidated basis, they will continue to have a debt of maybe about 7,500 crores. So probably market is seen to be cheerful, and going ahead, you are come 1st April and you will be having a positive outlook on the real estate sector because of the reduction in the GST to 5% and 1% for the affordable housing. And probably the DLF, because having a good presence in the NCR region, will be seen beneficiary. But what my point is that yes, with the kind of offtake which we are seeing is seen to be more in southern space, maybe like Cochin, Bangalore, Chennai, Hyderabad, Vizag, those pockets are seeing a better offtake, though the Bombay and Mumbai and NCR has not seen having started that kind of pickup being seen. So probably yes, allow this QIP or maybe have a little longer view, or on the relative basis, probably the other real estate stocks look good, maybe like Prestige Estate, or maybe like Soba, or maybe like Purvankara, who is also having a good presence in the affordable housing. So preference overall remains positive on the real estate sector, but the preference or the pecking order for the DLF may be on the number 4 or number 5.
Mr. Tulsian, before we let you go today, a word on ARVIND Fashions. Now, this played out exactly as you described it would, because first there was this whole faux pas and an embarrassment of the wrong underlying price. Then the stock was in, the T2T segment, and we had that up circuit for 10 consecutive days. Now it's trading at a level of about 1,030. What would you recommend on this stock?
See, Surabhi, as you have rightly said on the day of listing, I've said that the entire T2T period of 2 weeks will go waste with the upper circuit, but only during that period, if you recall, in these 10 trading days and one day, you had seen a volume of 9 lakh shares, and that was definitely some kind of deal between the two parties, because one transaction happened of 4 lakh shares, second happened of 4,27,000 shares. In fact, those deals should have been, checked by the SEBI, how whoever all entered into at a level of maybe about 400, 450 rupees, maybe on 3rd or 4th day of the listing in the T2T. But coming apart from that, and on that day also, I've said that the fair value seemed to be anywhere between 1,000 to 1,100, though a lot of euphoria was built on that day that the fair value is seen at 1,200, 1,300, 1,400, with many research reports having come out of this. But yes, now 1,000 rupees seem to be the base for this. And once the sector comes in limelight, because the way maybe Aditya Birla Fashion or maybe the shopper stocks kind of stocks, who are seem to be in the similar space, once they start catching up, then you will be finding the stocks to move up. Otherwise, take the realistic valuation of the stock anywhere between 1,000 to 1,100 for ARVIND Fashion. All right,
Mr. Wilson, thanks a lot for your time today. Well, let's talk about some more stocks. Just pull out INDUSIND Bank. Stunning move in last 15 minutes of trades. Just look at that stock. It's been a strong stock of late, of course. But today, through the day, there was some profit taking. At around 2 o'clock, it was at the low point of the day. And in the last 15 or 20 minutes, just flying through the roof. 24 rupees higher on that stock. So it's been a good one. Deepan Mehta is still with us. Deepan, your thoughts on a stock like INDUSIND Bank?
I think extremely positive on INDUSIND Bank, and stock had been beaten down because of the loan they extended to the ILFS holding company, but a lot of provisioning has been done over there. And sooner or later, we'll have more clarity on that particular transaction and save that particular loan. I think they have had an exemplary record as far as lending is concerned, and they have had a tight control over their NPAs. Another trigger for the stock could be the merger of Bharat Financial, and the microfinance business is certainly growing at a faster pace than the traditional banking services business in INDUSIND, and that could again improve the growth rates for INDUSIND Bank. And post this correction, the valuations are also at pretty attractive levels. So we are very positive on INDUSIND Bank, but the better way to buy it would be through Bharat Financial, where there's a small discount. Post merger, I think you may get a 2-3% discount if you buy Bharat Financial for the share of INDUSIND Bank.
Okay, Deepan, stay on. We'll have a couple of more questions for you. But for now, we have our Alpha manager joining us, Jinesh Kupani, Head of Equities of Access Mutual Fund. Jinesh, hi, good afternoon. Thanks a lot for joining us. So, the big question now, how to play this market? We've gone through a period of strong rally over the last 1 month. A lot of, what you call price damage has been corrected, even in the broader market. But you think portfolio-wise still a good time to be accumulating stocks?
Yeah, I think certainly last 1 month you are seeing sentiments more positive. First is to do with the strong flows from the foreign institutional investors after a long time, along with flows coming into the emerging markets. Also some positive sentiment around political stability and continuity going into election. I think this too has been really a critical aspect of why the markets have been up. Also, general sentiment looks like that the downside would be restricted now, if not big upside, as you are going into an election. But general sentiment looks positive, and we'll just have to wait for elections to get over, let the numbers come, and then how the government is formed, and what is its implication on the economic activity.
Jinesh, good afternoon. Good to have you on the show. So, right now there's a party going on. It's fueled by foreign liquidity, as you're saying. So the feeling is good. But is there some sort of a near-term risk, perhaps, which the market is ignoring? How much weightage do you give to a lot of people who are questioning growth numbers, for instance? They're questioning the state of the economy, citing slowdown in the auto sector, or on the consumer durables side. So is there a growth concern that is real, that perhaps right now the market is ignoring?
Yeah, on the fundamental side, if you really see, economy has been on a slower growth trajectory, let's say, than what it was 6 months back. Obviously, all the high frequency data points are more weaker than what you would have expected. So certainly, the fundamental side of the story is still, I would say, not bad, but still not great. But I think at this juncture, it is more to do with flows, more to do with sentiment rather than anything else.
Okay, looking at your Focus 25 fund, so much weightage to financials, and you got the bluest of blue chips, especially all the private banks except the one which perhaps you can't hold and can't talk about. But the names like ICICI Bank, HDFC Bank, HDFC, Kotak Mahindra Bank. At these levels, you think that there's still value in these stocks? You could still add?
Yeah, I think financial is an evergreen story. You want GDP growth of 6, 7, 8%. You need to have credit growth of 2x of GDP to sustain those growth rates. So I think it's a chicken and egg situation. If GDP grows at 6, 7%, then there is an credit growth of 2x of GDP, and it is vice versa. So I think anywhere in the world, if you see, financials are always a very strong indicator of growth momentum, and hence we feel that if you really take a 3 to 5 year view, then there is enough money to be made in this sector.
So I'm going to probe further on that, Jinesh. You have been holding a stock like Bajaj Finance, for instance, across several of the portfolios. It's been a great wealth creator for you. Now the question is this: I mean, as many of these stocks, including Bajaj Finance, once again approach their all-time highs, would you still put incremental money, I mean, all the fresh money that you're getting, and increase your holdings here in some of these large NBFCs or the large banks?
I think clearly I would not go like to go into a specific name, but generally if you really see some of the business models who have been able to withstand the onslaught of demonetization and the liquidity crisis during IL&FS, obviously that talks about their business model and their ability to navigate this I would say very bad phases of this business models. So I think to that extent we like the story where it is more retail oriented, more B2C kind of a nature. And as I said earlier, that BFSI space, which even includes the NBFC space, some of the NBFCs should do really very well, as there is huge opportunity as country grows by 6-7% for next decade.
Okay, the one missing piece in this whole story is autos. You have Maruti in your portfolio, of course. That sort of underperformed over the last 1 month, the entire sector, Jinesh. But you think it's a good time to perhaps look at some of these stocks? See names like Hero MotoCorp or TVS Motor, Ashok Leyland.
See, auto is also a good GDP multiplier story, but somehow last 12 months have been pretty bad for them. Maybe the festive seasons have gone wrong in terms of the assessment of the demand. General demand, as I said earlier, the fundamental economy is slowing down in terms of its growth rates than what it was, let's say, 6 to 12 months back. And I think being a discretionary spend, it will have its impact in terms of demand, maybe because of Uberization or general fatigue factor of people not buying at an age group of 25 to 30. So there are many factors at play why autos have not been doing well, and frankly, in some sense, we have gone slightly wrong in the assessment. Having said that, I think maybe we should give another 1 or 2 quarters, and hopefully, if things are better on the political front, things are then better on the economic front, then from the next festive season, as the base also kicks in, you should start seeing growth coming back. Also, the cost increases which has happened, all things have come at the same time and is impacting the sector.
Okay. So, Jinesh, take us through the construct from here on. First of all, are you expecting this rally to sustain and build even beyond elections? And if that's the case, if this is a bullish market for the next couple of months, then what is going to be your top priority in terms of sector calls?
No, I think very difficult to take that 1 month, 2 month call. But generally speaking, as I said, it doesn't look like that market's going down significantly unless the outcomes are very different. And if the global economy really for a significant slowdown and hence pulling out of money from the emerging markets. Tough to say whether we'll break 12,000 Nifty or we'll hover around this. But general, it looks like that it should be in a volatile phase, but more on the upward move than on the downward trajectory.
Okay. All right, Jinesh, we'll wrap it up on that note for today then. Thank you very much for joining in and giving us your viewpoint. That is Axis Mutual Fund. They've benefited a lot with the huge weightage on financials that they've held for the better part of 2018 in their portfolios.